This is AI Command App News. Here's what moved markets and reshaped business today. The headline this morning is red across the board. Global stocks sold off hard, and the rout was led by the very names that have carried this market for 2 years, the chip and AI giants. Micron dropped 9%. Nvidia and SanDisk dived in pre-market trading. South Korea's Kospi fell 10% in a single session, dragged down by Samsung and SK Hynix. And SpaceX, the company whose record-breaking IPO defined investor euphoria just weeks ago, has now shed $400 billion in value, sliding below its IPO day closing price. Anyone who bought after the first day of trading is now underwater. So what's actually happening here? In a word, doubt. For the first time in this cycle, big institutional voices are saying out loud what retail investors have started to feel. Goldman Sachs this week called the AI market a rubber band, warning that investor assumptions about the AI trade are starting to stretch reality. Strategists at Investors Business Daily went further, drawing direct comparisons to the 1999 dot-com bubble. Why it matters: when the engine of the entire index is a handful of correlated AI bets, a wobble in one becomes a wobble in all. For business leaders, the lesson isn't to panic, it's to ask how exposed your operations are to a sector everyone now agrees is priced for perfection. Which brings us to our second story, and it's a human one. Oracle disclosed that its headcount fell by 21,000 roles over the past year, down to 141,000 employees. The reason, in the company's own words, the adoption and deployment of AI technologies across their operations have resulted, and may continue to result, in reductions to their workforce. That is a Fortune 500 company stating on the record that AI is the reason the jobs are gone. And Oracle isn't alone. It's now part of a growing running list of major tech employers citing AI directly in their 2026 layoffs. The business implication is sharp. The productivity gains companies have been promising shareholders are starting to show up as headcount reductions, not just margin improvements. If you run a business, the question on the table is no longer should we use AI. It's what does our org chart look like when we do. Story 3 follows the money, specifically the cost of running all this AI. An AI memory startup called Ngram just raised $98 million, and its entire pitch is cutting token costs, because the industry is grappling with a rising expense problem fueled by ever more expensive models. And here's the twist Goldman flagged. While the hyperscalers keep raising their capital expenditure forecasts, AI software is getting cheaper to build everywhere else. That's a margin squeeze in the making. The companies spending the most may not be the ones who capture the value. For investors, watch the gap between capex and returns. That's where this story gets decided. Story 4. Cracks in the kingdom. CNBC reports that Google's online dominance is showing signs of fracturing in the AI era. Wall Street still sees the company as strong, but the rise of conversational AI search is complicating a business model that has printed money for 2 decades. If the front door to the internet is changing, every business that depends on search traffic needs a plan. That's not a 5-year problem anymore, that's a now problem. And finally, Story 5. AI has fully entered the political arena. CNBC reports that AI industry groups spent $20 million going head-to-head in a single New York primary race as companies fight to shape AI policy. Meanwhile, Anthropic is locked in a fresh public clash with the federal government over AI oversight. The takeaway for business: the regulatory ground under AI is about to move, and it's being shaped by the biggest checkbooks in the room. Whatever rules emerge will define what you can and can't deploy. Pay attention now, because the cost of compliance later is always higher. So here's the through line of today's news. The AI trade is being stress tested in the markets, in the labor force, on the balance sheet, in search, and in Washington, all at once. The hype phase is ending. The accountability phase is beginning. The businesses that thrive from here will be the ones that adopted AI on their own terms, on infrastructure they control, without betting the company on someone else's bubble. That's your AI news for today from AI Command App. We'll see you tomorrow.